Okay, so thank you everybody for joining us so far. It's a really good attendance actually, which is we're really grateful for. I'm Rob Earles, one of the business development managers at JobAdder. For those of you who don't know who JobAdder are or what we do, we're a recruitment CRM with an aim to focus on simplifying recruitment. Just to let you all know, just for a bit of housekeeping, that you are all in listen-only mode. But if you have any questions, please do post them in the questions box on your GoToWebinar panel, and we'll endeavour to answer those at the end. The session is also being recorded, so you will receive a link to the recording via a follow-up email tomorrow. So, to business. From my perspective, there's been so much positivity and success in this industry right now. It's an industry that I've been involved in, as Ash and Crawford have, for many, many years, myself over 12 years. I spend the majority of my time talking to recruitment business owners and leaders and their teams. It's massively uplifting to hear how the majority of you have adapted and pulled through. That said, 2020 was certainly a challenging year for the recruitment sector. Amongst the challenges we currently face and will continue to face in 2021, we'll also have the impending changes to the off-payroll rules coming into effect in the private sector this April, so more commonly known as IR35. We've already experienced the fallout of that, which it created in 2017 in the public sector. And what have we learned from this? And what should agencies be focusing on when it comes to engaging and paying contractors post-April? Today, we're joined by two industry-leading experts who will talk through these challenges and offer their expertise and advice when it comes to navigating through these off-payroll rules and IR35. So, with us today, we have Crawford Temple from Professional Passport. Welcome, Crawford. If you want to tell people a bit about yourself and what you do.
Hi, I run an organisation called Professional Passport, where we work with providers and assess them for compliance to ensure they're operating correctly across a number of different recognised compliant models. We're independent of anyone, and we work very closely with government departments to understand what their understanding and interpretation of the rules are, so that we can ensure that the way they're looking to enforce them is the way that we're making sure they're being applied. Professional Passport has been running since late 2006, early 2007, and we're recognised as one of the leading compliance organisations and recognised by many government frameworks as a body that providers need to be accredited by to supply contractors on their frameworks.
Fantastic, thank you. And we've also got Ashley Olliver from Compass Contracting and Employment. Same for you, Ash, if you don't mind just giving us a little bit of an overview about yourself and the business.
Yeah, of course. First of all, thank you very much for inviting me today. It's exciting to be on here. It's a real honour. Yeah, a bit of a background. I'm one of the directors and co-founders at Compass. We specialise in engaging, paying and employing contract workers. I've been working in this sector now for over 12 years, and most of my time has been spent around supporting recruitment agencies, whether it be around tax law, employment law, but ultimately with engaging and paying their contractors to ensure we're meeting compliance standards. So a little bit of background on me.
Fantastic. Thank you both. So really, really good to have you here. Let's start off with the questions and see if we can get some information out if you're kind enough to join. So Ash, first question to you, if you don't mind. I thought it'd be useful to start off with a brief overview of what the off-payroll rules and IR35 generally are about, if you don't mind taking us through that.
Yeah, of course. I'd expect obviously most of the audience now have heard and have a relatively good understanding of IR35, but there is still quite a lack of knowledge and understanding about the ins and outs. Obviously, we don't have a huge amount of time today. You could spend talking about IR35 for hours upon hours, as most of us have done over the last few weeks and ultimately years. But IR35 was a piece of legislation that was brought back in 2000. And it was to stop disguised employment. So in essence, if you look like, you act like, and you're treated like an employee as a contractor, then ultimately you should be taxed like a contractor. Now, I think what has changed more recently is the rules on the off-payroll rules that came in 2017, and are also looking to come in this April in the private sector. And the big differences really is prior to these off-payroll rules, it was actually the responsibility of the contractor to determine whether they're inside IR35, i.e. acting like an employee, or they're outside IR35, i.e. in business on their own accord. The main change is being now that it's the end hirer, the end client, that is one that has the responsibility for determining whether a contractor's role is inside or outside IR35. And this is commonly done through either the government's CES tool. There are a number of different other options out there in the marketplace that can provide and support recruitment agencies, but ultimately clients around doing statements. But it's actually the fee payer, which is typically the agency, which is actually responsible for ensuring that the contractor is paying the correct levels of tax. So that's why also we're seeing all the changes now. So IR35 in itself is not new, but the rules that have come in 2017 and what are coming in the private sector this April is where the main changes are. Hopefully that gives everyone kind of a brief overview. I'd be more than happy to also catch up with anyone after the webinar, as I'm sure Crawford would be, and go into a little bit more detail around the ins and outs of IR35 itself. But that's a brief overview.
Yeah, great. Thanks, Ash. So basically, on the face of it, it appears that HMRC are only trying to ensure that the correct levels of tax are being applied. It's not the case, and if so, why are the new rules? If that's not the case, rather, and if so, why are the new rules creating so much noise and angst with the recruitment sector, in particular contractors?
Yeah, and it's true. Ultimately, what HMRC are trying to ensure is that the correct levels of tax are being paid, not just by contractors, but by businesses as well. One of the things that the biggest gap that HMRC have is when a contractor goes to pay for a limited company, they're missing out on the employer's NICs, and that's the big gap. So when these rules were implemented in 2017 in the public sector, HMRC have stated, although we have yet to see kind of the proof around it, that they claim they collected an additional £550 million in the first year alone. In the private sector, they're expecting that if they don't make these changes, that by 23-24, there will be a loss of 1.3 billion in income tax. So that's obviously why HMRC and the government are trying to push forward with it. Now, the issues that you have is that ultimately HMRC are trying to force business to police something that HMRC haven't been able to do themselves. And what we have is historically, there's been quite a lack of understanding and education around IR35. Most clients, until more recently, had never even heard of IR35. Now, agencies over the years have used IR35 friendly contracts, making sure they've got things like right of substitution in there. But that's probably as far as it went on IR35 prior to the 2017 changes. Now, I think why there's issues for contractors on this is because there is that lack of understanding, and more recently, there's a lack of appetite for some clients, end clients that is, especially in sectors like banking, financial sectors, to want to take a pragmatic approach of analysing their contractor base, doing these determinations to decide which contractors are in or which ones are out. So you're seeing a lot of blanket approaches happening at the moment, where clients are going, we just refuse to work with limited company contractors. Contractors now have to be engaged and paid through a PAYE option, an employed option. Now, why do contractors get annoyed about this? Ultimately, it's around their net pay more than anything else. Typically, a contractor getting paid through a limited company would take home anywhere between 70 and 80% net pay. By going through an employed model, a contractor would probably take home on average anywhere between 60 and 65%. Again, depends if they're high rate taxpayer or not. Now, in the marketplace, there's an estimated 550,000 to 650,000 limited company contractors. And the more we see clients taking a blanket approach to IR35, we're going to see a significant number of contractors, rightly or wrongly, forced down an employed route. And obviously, the net impact on contractors is quite significant. I think it's also quite important to note that, like all of us, we live within our means. So we all have mortgages, we have rent, we have loans, we have lifestyles. So suddenly, if you're seeing an impact of 20 to 15% potentially taken out of your net pay, that is going to cause issues within the contractor marketplace. So that's why it's such a prominent and discussed subject, because it's disruptive to businesses, but it's also very, very disruptive to contractors. But I think it's also worth noting that we have seen in our industry, both in the recruitment and the payroll sector, lots of changes around legislation over the last 10, 15 years, and things will settle down. Things have settled down in the public sector, and it will be the same again in the private sector. But we are going to see some disruption over obviously the next few weeks and months leading into the changes in April and post. But hopefully within 12 months, there will be a kind of a new business as normal, as you like, and IR35 doing status determinations become more kind of the norm, part of the process of engaging and working with contractors. So hopefully that covers that for you.
Yeah, no, fantastic, thanks.
Can I just add a couple of bits onto that, just to emphasise a couple of bits of what Ash said? I think some of the noise has come about because historically end clients and recruitment companies have had no responsibility or liability around IR35, and therefore they've been fairly relaxed. The big issue is IR35, which is, as demonstrated by the cases the revenue have brought and failed to prove, is complex in making that assessment. It's not straightforward. And so because you've got this lack of knowledge and expertise in the sector within clients and recruitment companies who are now having to make those assessments in what is best described as badly written legislation and tests, there's very little certainty. And so until they can have more certainty of the outcomes, that's why you're seeing a lot of move towards PAYE. The other bit, and the bit that's concerning the contractors, a lot of contractors we're talking to about this, is the fact that when they move from limited company, if they've been given an inside IR35 and being told to work through an umbrella or PAYE, it's not just the drop in their income that impacts them. A lot of them can claim expenses, which they can claim through the limited company when they're outside IR35. And all of a sudden, all of those expenses that would otherwise be reimbursed tax-free to them now can't be. So there's a second impact on that. And so the outcome of that will be that a number of contractors who may be currently travelling because they're experts and they're going to where the expert work is, won't be able to claim those expenses, and that in turn will then drive rate negotiations.
Thanks, Crawford, appreciate that. Ash, just a quick side note, have you got a notification or something? Something was just chiming a little bit in the background there.
Sorry, apologies, Rob.
I think you've got something that was chiming in the background there, a notification or something possibly.
I do apologise.
May well be falsely accusing you of that, but I don't know whether it's something that you could keep. Kim just highlighted it, so we don't worry. Crawford, if we can move over to you if you don't mind. So there's already been a lot of lobbying from the sector against the off-payroll reforms. And on the back of the current situation we find ourselves in with COVID, the government took a decision to delay changes from this April to April 21, or last April to April 21. Will we see another delay? What's your view on this? And if it does come this year, how should we prepare for it, or how should the sector prepare for it?
Okay, will there be another delay? My guess would be absolutely not. They put it into legislation. It's gone through in the finance bill. Everything's done. They're currently about to implement an amendment to the legislation because there's a technical issue with the way it's been written, and the revenue confirmed they will sort that out, and that's all being done at pace because it's coming. So it's going to happen. With the amount that the government's expecting to recover from it, and when you look at the cost of the overall COVID situation, I can't actually believe that they would delay it any further because they probably need that additional money as soon as they can get it. So I think it would be wrong to consider that it would be delayed. In terms of what people need to do if it is coming in April, if you haven't already started, you need to start immediately, because within the whole process, you've got the situation where the if we're talking to a recruitment company's got to work closely with their end clients to understand how the assessments are being done. They've got to look at, in most cases, the end clients will have no idea how the contractors are working. So an end client can look at their contractor base and think this is a huge problem. But actually, if they go into the recruitment companies and do an analysis of how those workers are working, we've seen companies whose starting point was this is going to be a massive problem. They've carried out an analysis of the worker profile and found that they've only got a small percentage of workers in PSCs. The vast majority are already working through umbrellas. Well, if that's the case, you haven't got a mountain to climb. So the first bit you've got to gather is the hard data. How many of your contractors are in a PSC and affected by this legislation? And that will allow you to size your problem and work out what the issue is. Now, obviously, you've then got to work out whether they're inside or outside. There are lots of tools available. The one that I've sort of looked at and feel delivers a good outcome for people is IR35 Shield. It's just the way that the system works. It uses artificial intelligence. And what it does do is when you do an assessment on a role, it doesn't just go pass or fail. It gives you an agenda of all the descriptions that you didn't make it good in relation to IR35 and what's bad. And with this change in legislation, lots of clients will be fundamentally reorganising their working relationship with their workers. It's not about manipulating someone's relationship to become outside IR35, it's being accurate. Now, we've written a guide with IR35 Shield, and I believe it's just been posted in the chat section with a link to it that you can download. And that basically has got 4 stages and 12 steps that you can go through. Now, obviously, if you're not using IR35 Shield, then you haven't got to be worried about that. You can just change script, put a line through that and change it to whatever you're using. But it makes sure the 2 key elements are carried out. One is an accurate assessment and how you communicate that to the workers. And the second one, which becomes absolutely critical because of the liability structure, is making sure that you're only operating with compliant providers and a compliant supply chain. And that's one of the areas where there's a huge opportunity for recruitment companies to gain market share if they're strong in that area. So that guide will give you a process that you can walk through, understand what you need to do, how you need to do it. And as Ash said, you can go back to him, or you can come back to us if you've got any questions, or if you want to go and look at IR35 Shield, you can go and look at that. But IR35 Shield is nothing to do with us, so don't be asking me questions on it. I just understand the process they use, but commercially, just deal direct with them. So there's a lot of work to do. Timelines are tight. If you've got your contractors on a month's notice, then you need to get your new contracts in and sorted before April. To do that, you're going to need to provide notice probably end of February at the absolute latest. And to be able to do that, you've got to have all your assessments and rates and everything sorted out before you can provide notice. So, you know, it's a steep curve now if you're just starting it.
Yeah, I have to agree with you on that, Crawford. I think around the point will it be delayed, I think it's highly unlikely. I'm not sure if you've seen Crawford today or any of the audience, but I believe HMRC have put a statement out today with regards to supporting the construction sector with doing assessments, doing IR35 reviews, etc. Obviously, the government have their own tool set. I think it's pretty much universally recognised that it's a little bit flawed. It doesn't capture things like mutuality of obligation correctly. But yeah, there is still time to act. IR35 Shield is a great tool. There are also a number of other fantastic tools out there. I think people have heard of Kudos, Kingsbridge in particular. But you know, there is time. But I think from an agency perspective, if you haven't engaged with your end clients now, do so quickly. But really understand what is the appetite of your clients with dealing with IR35 and wanting to take a pragmatic approach, as Crawford just spoke about. I fear at the moment, because it's become a bit more of an employer's marketplace recently because of the impact of COVID, and where you have you know, supply and demand, etc. I think because there's more supply of contractors than there is demand for roles, I actually unfortunately expect we'll see more end clients going and taking a blanket approach to IR35. But post-April, I think when end clients have got heads around IR35 and a bit more comfortable around it, then I think you'll start to see clients taking a more pragmatic approach again post-April. I think some will take the perceived easy route of doing these blanket approaches. Not that I actually agree with that myself, but that's what I suspect will probably happen in the marketplace. And therefore, we will see a significant number of contractors pushed into an employment model, as we mentioned before.
Okay, yeah, thanks Ash, and thanks Crawford. So I guess Ash, with that in mind, so no delays, and the fact that people do need to sort of prepare for this and have that knowledge around it, and you making the point about there being a significant increase of contractors being paid via PAYE, what are the options available for agencies when it comes to engaging and paying contractors and their temps?
Well, ultimately, the same options available today and have been for the last few years are going to be available post-April. I think it's important to note that limited companies or PSCs is still very much a viable option, assuming and making sure that the contract is outside IR35. However, assuming that we're going to see that significant increase into a PAYE employed option, then ultimately you still have agency payroll. Outside of agency payroll, then I suppose the go-to solution, the most popular solution, is going to be umbrella. But over the last probably 12 to 24 months, we have seen quite a significant increase in contractors and agencies and clients adapting and using the PEO or a joint employment model. So you also have the CIS solution within the construction industry that has its own set of legislation around it. That's not an employed model, that is a self-employed model. But I suspect we will start to see an increase in the CIS within the construction industry as well. So ultimately, same solutions that we see today, but some of the audience may not have heard of the PO model, and I think we'll see an increase around that.
Yeah, so as you rightly mentioned, Ash, so it is effectively the same solutions that we all know and love. But as you mentioned, there is that PEO model, which I have heard of as an alternative option, but it's not something I'm massively well acquainted with, and perhaps some of the audience aren't either. Can you talk us around that one?
Yeah, so the PEO, everyone asks, well, what does PEO stand for? It stands for Professional Employment Organization. And ultimately, it derives from the US, where it's a very popular model with engaging, employing, and paying workers. It's similar to umbrella in essence that the payroll provider or the PEO provider becomes the employer of the contractor, and therefore responsible for making sure the correct deductions are made, and also for all those statutory obligations, like sick pay, holiday pay, workplace pension, etc. So it's similar to umbrella, but from a contractor perspective, what really works well, that it's a straightforward PAYE model. So from a contractor payslip, they will just see their PAYE rate times the hours or the days that they've worked. So sometimes it eradicates that confusion, sometimes associated with operating and working through an umbrella solution. I still foresee umbrella being the main option. It has a great place in the marketplace for supporting contractors, and that's what I expect most will use. But we're seeing an increase with agencies wanting to use this PEO model. And we are seeing certain sectors like the financial services and banking, some clients saying no to umbrella as well as limited company. And that tends to be more around a lack of understanding and education of what umbrella is. Sometimes there's perception that umbrella is limited, but it's not. It is a PAYE option. But yeah, the PO option is a great option for agencies that don't want to operate their own internal PAYE for contractors, or don't particularly want to grow it, but they have that alternative option by using a payroll provider that offers PEO. So hopefully that explains it in a nutshell.
Yeah, thank you. That's great. Crawford, I think it's worth noting that one of the impacts we saw post the public reforms back in 2017 was the increase in tax avoidance schemes, where certain providers targeted agencies and in particular contractors with what you like to call "I've got a good idea" scheme. I know this is an area that you've got a lot of experience with. Firstly, what are the telltale signs of a scheme potentially being non-compliant? What can and should agencies be doing to protect themselves, their clients, and of course their contractors?
Okay, yeah, interesting enough, the revenue, we've had a significant number of conference calls with the revenue recently because they're increasingly worried about the number of what they call disguised remuneration schemes that are going to suddenly appear. What happened in the public sector and the way the liabilities were structured was that the liabilities sat with the fee payer if there were any liabilities and didn't pass up the chain. And effectively what that resulted in, because workers in the public sector were facing maybe 30+% pay cut, and as Ash said earlier on, you know, they all had a lifestyle and they all had arrangements, and you know, anyone sitting here today and listening, if someone said to you tomorrow your salary's being cut by 30%, your take-home pay is going down by 30%, it's going to cause everyone problems. And so what happened in the market is the "have I got a good idea for you" schemes came along and said, oh, you don't have to have that 30% pay cut, you're only going to have a 5% pay cut, and gained huge traction very quickly. There's already evidence that that's beginning to happen in preparation for 2021, but there's a real warning for the recruitment companies because the liability structure has changed. And so the liability, if that happened, and the debts couldn't be recovered from the fee payer, they can pass back up to the supply chain. So the agency or the end client could end up picking up liabilities where they're just not aware of it if they're not using compliant providers. So the first thing, and the guide that I spoke about earlier talks through this, one of the first things people should do is make sure that they're dealing with a provider with a recognised compliance accreditation like Professional Passport. We've got an insurance behind it, so if we say they're compliant and they turn out not to be, and the recruitment company and or end client suffers as a loss as a result, if we've been negligent on our assessment, they can make a claim against that loss that they've incurred. And as far as I'm aware, we're the only accreditation that's got that facility. It's almost impossible at arm's length to understand whether a provider is compliant or not. Some agencies use questionnaires. Well, of course, if someone's not compliant, then they know the answers they need to provide on those questionnaires, and so they'll just tell you what you want to hear. And so there's a whole series of things that we do through the accreditation to support that. Because the revenue are so concerned about it, we are also in discussions with the revenue about a pilot scheme where we'll be looking to have the revenue make checks against the intermediary reporting, which the recruitment companies do, and the providers' RTI submissions to ensure that they're aligning, because that's probably the fastest way to identify disguised remuneration schemes, and it helps put an additional layer of safety layer on our accreditation process. So we're hoping that through our discussions with the revenue, we can get that, and we'll test it as a pilot, and then if it works, then maybe they'll roll it out wider. The one to watch out for is within the accreditations, make sure you understand the parameters of the accreditation, because there's a number of accreditations that say they've done it all, but when you read and understand the responsibility they take if they get it wrong, they don't take any responsibility. The other thing to understand is what the parameters of compliance are, and on the Professional Passport website, we've got a list that shows firstly what we can approve people for, but probably more importantly what we can't approve people for. So for example, one of the things that we've seen emerging is where a recruitment company faces a company that's an umbrella, and they think they're dealing with an umbrella employing workers on PAYE, whereas that umbrella is actually subcontracting to PSC workers and paying 100% of the money across and relying within the legislation on the fact that the reasonable care hasn't been taken in making the assessment. Now, unless the agency's all over that, then they are unwittingly building up a significant potential liability. And those companies will attract a lot of people. We will not accredit any provider who subcontracts to limited companies. It's just far too dangerous. So there's a new breed of disguised remuneration coming out. We're also seeing, and we've spoken to revenue about it, we're seeing people that could best be described as fraud, where, you know, I'm not even sure they're doing RTI returns. They're providing what are compliant pay slips, but the messaging that's going to the contractors and what they're paying is different to the pay slips. So one of the things we've been pushing very hard, and the revenue have been promoting it, is trying to get contractors to sign up to personal tax accounts, because that will show them where there's a discrepancy between the information they're receiving from a provider and what the revenue's being told the situation is. But most of the recognised accreditations will be able to identify those things. It's just making sure we have to look at everything a provider's offering and sign it off. Some of them can actually just look at one aspect of a provider's offerings and ignore everything else. So just make sure and double check that the one you're dealing with has been looked at, has been signed off, because there will be a rise in it. And the reason why that's so important now is the liability structure has changed in the legislation, so it goes back up the supply chain.
Right.
Crawford, just a quick one on that. I've over the last couple of months or so, I've seen a huge increase in contractors directly getting tax bills relating back to, you know, several years prior to the year that we're in now. When is it going to be a case that, you know, where does that transfer from the contractor getting the tax bill to an agency, and how would an agency kind of recognise whether a scheme is non-compliant if they haven't gone through an accreditation, with whether that be professional passport or someone else?
Yeah, but the tax bills historically that are going to contractors are going, and there was no ability for the revenue to pass it back up the supply chain, or limited liability for them to pass it back up the supply chain. We've already made suggestions to the revenue, because if you think about it, they have the information they get on intermediary reporting, they have the information on the RTI return. So they've got both, they're the only people that have both sides of the information. So they should be able to immediately identify any tax avoidance scheme or disguised remuneration very quickly, because those returns are going in quarterly. So we've made proposals, and I gave evidence at an all-party parliamentary group recently, suggesting that if the revenue had the information and hadn't acted on it, they should be prevented from going after the workers within the 12-month period. So if they haven't done anything with it in 12 months, then they've got to go after the provider or use the legislation to pass it up the line. From the noises coming out of the revenue, where someone has been responsible in their approach and done everything they could, the revenue does recognise, I believe, that there are people out there who are at best pushing the boundaries beyond belief. And I don't think they would seek to recover necessarily where someone had acted appropriately and done all the due diligence. If someone hasn't gone through and done that process, then the revenue will without doubt apply that legislation back on the line. So yeah, but the good news for the contractors is in most cases it won't be their problem anymore.
Okay, makes sense. We've got, I believe we're running till 1:45, aren't we? So I've got one last one for yourself, Crawford, that we'll run through, and then maybe we'll cover off a couple of questions from the So Crawford, just one last one for yourself. You referenced the importance of working with compliant providers and PSLs, and we've really seen a move towards PSLs and ASLs. What is the difference between a PSL and an ASL, and what's the purpose of having both?
Okay, preferred supplier list is a PSL, and generally what happens is recruitment companies, when they're dealing with a contractor who hasn't already got an established relationship with a provider, they will build a close relationship with a number of providers that they promote. That might be 4, 5, 6 providers, rather than a massive great broad list. An ASL is the approved supplier list, and what that is where a contractor is already using a provider and comes to that recruitment company and says, I want to carry on my relationship with this provider, So long as they're on the approved supplier list, then that's fine. Now, the approved supplier list, we suggest to recruitment companies to make it as broad as possible, because contractors gain rights by continuity of employment with their umbrellas. And one of the things that we saw in the COVID situation was where recruitment companies had very short ASLs and forced contractors to change companies, they fell outside of the furlough arrangements and got nothing. And so, you know, there is a real benefit in carrying out and having a broad ASL. Generally speaking, as long as those providers in the ASL have got the accreditations in place, then there's going to be very low risk to the recruitment company. Just to make sure, recruitment companies should regularly check accreditations in case a provider's had one removed. It doesn't happen often, but just have a process where maybe on a monthly basis you're checking the accreditation listings for those providers to make sure everything's compliant. But yeah, so PSO and ASL.
Fantastic, great. I think if it's okay with you, Ash and Crawford, we'll move on to some questions that we've had 3 or 4 questions through from people. So let's start having a look at those. I've got one here actually from Daniel. He's saying it's clear to see from what we're saying here that umbrella will be the main option post April. But there seems to be some confusion around the difference between PAYE and umbrella, especially around pay rates. So would you mind offering some clarity around?
Yeah, I'll jump on that. I know Crawford's very well versed around this, but I think what you have is sometimes the issue where contractors are going down the umbrella route is they haven't had a clear and transparent explanation of what umbrella is at the recruiter end. In the sense, what I mean there is sometimes a contractor will be quoted an umbrella rate of £15 per hour, £20 an hour, but it isn't necessarily explained to them that their umbrella rate will be inclusive of their PAYE rate, it will be inclusive of their holiday pay, and the employment costs that an umbrella provider will need to deduct. When the income received by the umbrella provider, they need to make all of those statutory deductions. And when a contractor then goes to an umbrella provider, sometimes the perception is they think whatever their rate is actually just straightforward PAYE rate, excluding the holiday pay and the employment costs. So I think what's really important, what has helped over the last few months, since April last year, we've had the key information document as part of the conduct regulations. Agencies should be providing the key information document to contractors explaining how they are going to get paid. And in an umbrella one, it should give an explanation of all the deductions along with an illustration of those deductions. If then coupled with the agency and the recruiter, when they're talking to the contractor, actually explain, we're going to pay for an umbrella provider if that's your choice, but just to be clear, your umbrella rate is inclusive of your PAYE rate, your holiday pay, and the employment cost. I think that's what's really, really important, is ensuring that that clear explanation is given to the contractor. Now, most compliant and good payroll providers will reiterate that to the contractor at point of registering them, and would also provide them with what's known as an illustration, again, showing them those deductions. But I think it's that lack of explanation sometimes, explaining what the actual umbrella rate is where the confusion typically lies. I'd imagine, Crawford, you've probably got a little bit to add around that.
Yeah, I mean, I don't want to take up too much time. I'm conscious of time, and I've got a number of questions here. But yeah, it's understanding. Make sure your umbrella provides you an illustration which will show the true value of the rate that you're being offered effectively, rather than looking at the headline rate, because that is the rate they're paying to the umbrella. Rob, I've got about 4 or 5 questions that have dropped into my chat box that I can deal with fairly quickly. Do you want me just to knock some of those out?
Yeah, that's fine, Crawford. I mean, we can push it on a little bit. That's absolutely fine. So don't overly worry about the time. Okay,
I've got one from Tony. Says TNS legislation states a contractor can claim expenses if not subject to SDC in an umbrella. Can you ask Crawford to clarify why a worker is not who is not subject to SDC cannot claim expenses? A worker can claim expenses. The different if they're not subject to SDC. All that SDC does is if you're going to a single place of work, it allows you to claim, say that place of work is temporary. There's other legislation changes around expenses, which means if you're claiming those from your general earnings, you can claim mileage. The rest of them would have to be claimed through self-assessment tax return. So it's not that you can't claim them, it's just that in the old days, the umbrella used to relieve them all, and that's unlikely to be the case now. There are some really technical bits that I could get, which aren't appropriate to get into because it'd take about an hour to describe them. But Tony, if you want to come back to me, then come back to me and we'll get into those. Although, next one's from Duncan, although the legislation comes effective from April 2021, will HMRC retrospectively to seek to claim if workers are deemed to be inside of IR35 prior to this date? The Revenue used some very careful wording on this, and they said they'd have no automatic process. But if you know the revenue systems, they've probably got no automatic process for anything. So the answer is that they probably will, but it's going to be hit and miss. Another question from Duncan: should agencies insist on ensuring clients provide the output of their assessments and rely on these results, or is this something agencies should do as well? Duncan, I'm not sure the basis of it. The client has got to provide the outcome and their reasons for the outcome to the agency and to the contractor within the legislation. The key thing you've got to do is make sure that you're happy with it and it's representative, because if you're an agency and it gets challenged, you could end up holding a liability. So the key thing here is recruiters and clients need to get really close together and make sure they're all comfortable with what's going on. Ash, if there's anything you want to jump in on, feel free to. Next one's a question from Tom: what would be the next steps for an agency should their client not take any action when given advice on IR35, i.e. not making status determinations? Well, the legislation covers that. If the client doesn't make a status determination and provide it, then the contractor effectively can make their own status determination, and if they determine themselves and they've used reasonable care as being outside IR35 and the Revenue disagrees, then the bill goes back to the end client. So an end client is unlikely to let someone else go and make that determination on their own. Question from Paul: if IR35 comes in April, how will it apply to an end client engagement where the client is outside the UK? If IR35 comes in April, how will an end client engagement where the client is outside the UK? Well, if the engagement and the contract is outside of the UK, then it's not subject to the UK test because there's no requirement on them. So I wouldn't see how they could apply that legislation or apply those tests to it, basically. And then question from Declan:
on that one, Corey, I think the government have also put a statement out saying that if the end client is overseas, so obviously not based in the UK, and they have no UK entity either within the UK, then that's obviously, it wouldn't be subject to IR35 and off-payroll rules.
Yeah, great. Thanks, Ash. Question from Declan: do we need to provide a KID if the role is confirmed outside IR35? We're going into a completely different area there. If the role is outside IR35, do you need to confirm a KID? I think you've still got to confirm a KID anyway. So yeah, that's opening up a whole different thing. There's some really good guidance on that. If you do a search on key information document agency workers, Bays has put some good guidance out. I know we're just about to put a couple of articles out on it where we've been working on where some of the failings are happening and clarifying it with Bays. Rob, that's all the ones that dropped into my chat, which I've managed to do in 3.5 minutes.
Yeah. No, absolutely perfect. No, thanks a lot, guys. And I think you know, that's us pretty much done for today, and I hope everybody's found that really useful. Thank you to you both for taking the time to speak with everybody today. Some really useful and practical advice on the off-payroll rules, IR35, and how to engage and pay contractors in what is frankly an ever-changing landscape. Both Crawford and Ashley have said that they'd be more than happy for their details to be forwarded on. So if anybody wants to touch base with either or both of them to follow up today's topics or anything else related to payroll or compliance, they can do so. Equally, from my perspective, if anybody wants to learn or understand more about the JobAdder CRM recruitment platform and how we can support you, please do get in touch. Also do follow JobAdder and Professional Passport and Compass so that you can see any forthcoming webinars. Other than that, thanks again for taking part, and we'll speak to you all next time.
Okay, thanks everybody. Thanks Rob, thanks Crawford.
Thank you. Take care.
Bye-bye. Bye-bye.
Bye.